In 40 days, a country's entire market lost almost half its value. Over 360,000 leveraged trading accounts were wiped out. More than 60% of the people behind them were under 35. The KOSPI fell 44% from its peak. Circuit breakers triggered 2 days in a row, a first in the market's history. And the government's response? For weeks, no bailout. This is the story of how it happened and why it's not over yet. Rewind to April 2025. South Korea's KOSPI enters one of the greatest bull runs in its history, up 297% by June 2026, its strongest rally since the 1980s. The fuel was AI. Global demand for the memory chips inside AI data centers went vertical. And two companies, Samsung Electronics and SK Hynix, make up almost half the entire index. On June 19, 2026, the KOSPI hits an all-time high, 9,385 points, and retail traders don't just buy, they borrow to buy. Margin loans, leveraged ETFs, derivatives on derivatives, all stacked to amplify the ride-up. Risk number 1. An unusual amount of that buying was leveraged, which means it could all be forced to sell at once. Risk number 2. With two stocks carrying half the index, a shock to either one shakes the entire market. And risk number 3, the one nobody wanted to say out loud. Was the entire AI boom running ahead of real demand? Then, over 6 weeks, it all comes apart. July 13th. Automatic selling by leveraged ETFs accounts for 62% of net selling that day. This isn't panic yet, it's math. A mechanical process, not a panic, but about to snowball. Retail investors are already down 2.15 trillion won in leveraged positions, and the real selling hasn't even started. July 15th. President Lee Jae-myung calls the market quite unstable and points at leveraged ETFs as part of the problem. Then the Bank of Korea does something it hasn't done since 2023, a surprise interest rate hike. It triggers a fresh wave of selling across AI chip stocks. The index falls 6.37% in a single session, closing at 6,820. A temporary circuit breaker kicks in. The market is trying to catch its breath, and failing. July 27th into the 28th. For the first time in the KOSPI's history, market-wide circuit breakers trigger 2 days running. The index falls intraday to 5,262, over 12% in a single session, just shy of the worst day the KOSPI has ever seen. The spark for the worst of it. A report that China had begun mass-producing its own advanced chip-making equipment. A direct threat to Samsung and SK Hynix's technological edge. Add to that, SK Hynix's own earnings landed short of the sky-high numbers already priced into the stock. One more crack in the AI story investors had been leaning on. Samsung Electronics sheds 13.4%. SK Hynix drops 14.7%, its US-listed shares closing below their own IPO price. Korea's tech-heavy KOSDAQ gets halted for 20 minutes. Trading floors across Seoul effectively freeze. By the close on July 29th, the KOSPI has fallen more than 43% from its peak, briefly touching almost 44 intraday. $2 trillion in market value, gone. In pure monthly terms, this is now the worst month in the KOSPI's entire history. Worse than the 1997 Asian financial crisis. Worse than 2008. The 1997 crisis took the index down 27% in a month. 2008's collapse, 23%. Even the COVID crash of March 2020, a 31% plunge, doesn't match what just happened here. Part of why outstanding leveraged bets on Korean stocks hit a record 29.2 trillion won, about $20 billion, in early July, right before the unwind began. The Blue House's own words for it? A reassessment process, where the market finds its balance. To the people who just lost their savings, that phrase does not land well. Numbers on a chart are easy to watch from a distance, but behind every one of those percentage points was someone's retirement account. Someone's down payment, someone's savings. Over 360,000 margin accounts were forcibly liquidated, closed out automatically once losses hit a threshold, not by choice. More than 60% of the people wiped out were under 35, a generation that came into this rally believing it was their one shot to get ahead. Economic-related suicides in South Korea were already climbing for a decade, from just over 3,000 a year in 2015 to nearly 4,400 in the most recent year on record. This crash landed on top of that trend. In direct response, the government activated what it's calling the Economic Crisis Family Suicide Prevention Plan, a coordinated safety net response, not just a market policy. Two numbers matter here. 1393, Korea's existing 24-hour suicide prevention hotline. 1375, a brand new debt counseling hotline launching this October, built specifically because of this crisis. That new line offers debt counseling, debt adjustment, and personal bankruptcy filing support, one stop for people who suddenly owe more than they can pay. A market crash is a data event. What it can trigger in people's actual lives is a completely different kind of story. So with that human cost on the table, how did the government respond to the market itself? The official line, delivered while the president was traveling abroad. The conditions for activating a market stabilization fund haven't been met yet. Officials pointed to three culprits: China's chip expansion, doubts over AI investment returns, and Korea's own leverage-heavy market structure. Retail investors did not take that well. The government had spent the last year encouraging this exact kind of market participation, and was now calling the losses everyone else's fault. Financial regulators called an emergency meeting to discuss tighter restrictions on the leveraged ETFs at the center of the selling. On the table, limits on leveraged ETF products and new restrictions on short selling. And it wasn't just retail money leaving. Foreign investors didn't wait around either. Through early July alone, foreign investors had already pulled a record 150 trillion won, nearly $100 billion, out of Korean stocks this year, the largest half-year outflow ever recorded. Source: Korea Exchange, via Korea Times. By mid-July, that number had grown to roughly 160 trillion won. As a share of the market's total value, it's the heaviest foreign selling since the 2008 financial crisis. Source: IBK Securities, via Big Go Finance. All of that outbound money put real pressure on Korea's currency, the won, even as the country was posting record exports. A market this connected to global AI infrastructure was never going to have a local-only crash. The same day Korea's chip stocks broke, Japan's Nikkei fell 4%, Taiwan's TAIEX dropped almost 4%, and Hong Kong and Shanghai slipped 2%. Not everyone followed. Australia's ASX 200 actually gained slightly that same session. In the US, futures edged lower, and chip stocks felt it too. Samsung and SK Hynix aren't just Korean companies, they're load-bearing pillars of the global AI supply chain. Even oil prices dipped the same day, as the risk-off mood spread beyond stocks. Which raises the uncomfortable question underneath all of this. If two chip companies can shake markets from Seoul to Wall Street, how fragile is the AI boom everyone's portfolios are leaning on? And that question doesn't have one clean answer. Not everyone agrees on what comes next. Some foreign brokerages argue the worst of the forced deleveraging is already behind the market, and that it's carving out a bottom somewhere in the 5,100 to 5,300 zone. Source: Big Go Finance, citing foreign broker reports. Others aren't so sure. If that floor breaks, the next real support doesn't show up until 3,200 to 3,400, a level last seen in 2021, roughly 40% below where the market sits even now. One analyst has already compared this crash, in scale, to the depth of the 2008 collapse, if the worst case plays out. Source: Eugene Investment and Securities. Strip away the specifics, and a pattern shows up before almost every crash like this. Too much of the index concentrated in too few stocks, too much of the buying done on borrowed money, and everyone leaning on a single story to justify the price. When that story wobbles, leverage turns a dip into a collapse. It's not the first market to learn this the hard way. It won't be the last. The only real question is whether the next one sees it coming. If you want the next crash broken down like this, before the headlines catch up, subscribe. And if anything in this story hit close to home, Korea's suicide prevention hotline, 1393, is there 24 hours a day.